All right, today we're going to break down one of the most head-scratching earnings reports we've seen this season, Microsoft's fiscal Q2 2026. Because, on the surface, they absolutely knocked it out of the park. But the way the market reacted, well, that told a totally different story. So let's get into it.
So here's the big mystery we're trying to solve today. You've got Microsoft crushing expectations, beating revenue by a full $1 billion. And yet, in after-hours trading, the stock just gets hammered. So what in the world did Wall Street see that completely overshadowed such a huge win? That's the question we're going to answer.
Okay, so if you just looked at the headlines, everything looked fantastic. I mean, this was a powerful quarter by any standard. Microsoft delivered a super clean beat on revenue and on profit. Let's dig into the actual numbers.
First thing to look at, adjusted earnings per share. Microsoft came in with an impressive $4.14. That just sailed right past what the analysts were expecting, which was around $3.91. That's a solid beat, the kind that usually gets investors pretty excited.
And it wasn't just on the earnings side. Nope. Total revenue hit a massive $81.3 billion. Now, not only did that beat the $80.3 billion estimate, but it also means they grew a really healthy 17% year over year. So far, so good, right? Well, then the market opened.
And this is where the whole story just flips on its head. In spite of those incredible headline numbers, the stock tumbled more than 6% after the bell. And that disconnect, right there, between the great results and that reaction, that's where the real story is. So what spooked Wall Street so badly?
The market's anxiety really just boils down to one thing: the absolutely staggering cost of this AI arms race. The earnings were great, for sure, but there were two other numbers lurking in the report that sent a chill through the market, and it shifted the entire conversation from AI demand to the cost of AI dominance.
Now, just look at this chart. The difference is pretty stark, right? On the left, you've got that strong 17% revenue growth we were just talking about. But then you look to the right, and you see capital expenditures, or CapEx, just exploding, up 66% year over year. That's $37.5 billion in a single quarter. This huge gap is the entire reason the market is worried. The big question is the spending getting way out ahead of the growth?
And what really added fuel to that fire was the growth number for Azure. Now look, 39% growth is still fantastic, absolutely incredible, but it was a slight slowdown from the last quarter. And for investors, staring at that gigantic CapEx number, even a tiny deceleration was enough to make them ask, is Microsoft really getting the immediate payback to justify this kind of spending?
And this slide really nails the core conflict here. You've got management telling this long-term story, right? They're saying, hey, we are investing like crazy right now to build the infrastructure for the enormous AI demand we know is coming. But the market reacted with very short-term skepticism. It was basically saying, that's great, but show us the proof. We're worried about the cost and the immediate return on the spending spree.
Okay, so let's flip the script and look at this from management's perspective. Because on the earnings call, they didn't shy away from this. They addressed the anxiety head-on and laid out the strategy behind all this spending. And the picture they painted goes way beyond just Azure.
This quote from CFO Amy Hood is absolutely crucial to understanding what's going on. What she's saying here is that this CapEx isn't just a one-for-one investment in Azure revenue. These new GPUs they're buying, they're being spread across the entire Microsoft ecosystem to power their own products like Copilot, not just sold off as cloud computing time.
So management actually broke it down like this. First priority for that new capacity, it goes to their own AI products, like Microsoft 365 and GitHub Copilot. Second, it goes to internal R&D. And then whatever's left over, that's what goes to third-party Azure customers. See, this totally reframes the whole ROI calculation. It's not just about renting out servers, it's about building an entire AI ecosystem.
All right, the other big worry out there was customer concentration. Basically, how much of Microsoft's future is tied to just one customer, OpenAI. And Microsoft gave us the number. Turns out 45% of their massive $625 billion commercial backlog comes from OpenAI. That's a huge number, no doubt. But let's take a look at what that other 55% looks like.
And this is really the key takeaway. That remaining backlog, which is still over $350 billion, grew at a super healthy 28% year over year. So what this tells you is that beyond that big flashy partnership with OpenAI, there is broad, deep, and diversified demand from all kinds of enterprise customers all over the world. So, after weighing the amazing results against the market's very real concerns, and then listening to management's long-term plan,
What's our verdict?
Let's get to our official take for the next quarter.
We are officially assigning a market perform rating to Microsoft. Look, the company's long-term AI strategy is solid, it's powerful. But in the short term, this uncertainty around the return on this historic level of spending is probably going to keep the stock in a bit of a holding pattern, at least until the market sees more concrete proof of monetization.
So here's a quick look at how we see the next quarter playing out. For Azure growth, we expect it to land right inside management's guidance, somewhere between 37 and 38%. The big risk, obviously, is if it slows down even more. The catalyst? Any sign that growth is picking back up. And for the stock itself, our theory is that it's going to be pretty range-bound. The market is just in a show-me phase right now. Another big surprise in CapEx would be a risk, but the real catalyst, the thing that could get the stock moving again, would be clear, hard data showing that Copilot is making them money.
And let's close with this thought. Microsoft is in the middle of one of the most ambitious corporate investment cycles in history. So the question for you as an investor isn't really whether AI is the future. It's how long you're willing to wait for that future to pay off. This is not financial advice.